Hello traders, this is Rich from tradesight. I want to take a few minutes and talk about the recent price action in British pound versus the dollar and what to expect going forward. We have had a very extended move in the pair, and recently we saw some very large range candles forming on the chart. So I want to just break this down and talk about the different candles and what they may have to say about what price is going to be doing going forward. So without further ado, let's move on and take a look at the daily chart of the British pound. All right, so here's where we are in the daily chart of the British pound, and as you can see, we had a fairly well organized and pretty protracted drop to the downside. And following that drop to the downside, we then started to level off and bounce back to the upside before starting to really start to put in some wide-ranging candles to the downside. So anytime you have this type of a move, you always want to really dig into the actual bars and really try to break down what the price action is telling you. What we're going to look at today is a 4-bar pattern that we call the trend termination candle, and talk about the implications of what that might be going forward. First of all, let's break it down bar by bar and talk about the trend termination candle, which is a 4-bar pattern. And we're going to go through it bar by bar and talk about it and discuss what to expect on the other side of this. Now, what we're going to be focusing on are the 4 bars here at the end of this run that are in this shaded box now. The first one we want to look at is the first 2 candles. Since we're looking for a reversal back to the upside, the first 2 candles of the pattern need to be to the downside. Now you can see those 2 candles are marked. We've got candle 1, which is just not a big down candle, but it is a down candle. Then we have that follow-on candle, candle number 2, where we did get some pretty extensive range expansion to the downside. So those are the first 2 candles that we need. They have to be in the direction of the trend. And the direction of the trend here was clearly to the downside. Now what we're looking for next is a candle that's going to undercut the low of candle 2, but close up on the day. Now I've just labeled that candle number 3 above that close. So we did fulfill that requirement. That's kind of the change up candle. That's where maybe there's a little bit of short covering. It's better if it's a wider range candle with some extension to the upside. Didn't really have that in this case, just because the trend is so negative. What you want to look for once you have those first 3 candles in place, then, is that 4th candle, which is the signal candle. And we did get our 4th candle in the pattern, which was a big downward ranging candle. So we do have this pattern locked in place now. Let me just review it one more time. We've got 2 candles that break to the downside, which is in the direction of the trend. Candle 1, candle 2. The 3rd candle takes out the previous low but closes up on the day. That's candle 3 up here. That's the change up candle. And then the completion or the signal candle is candle 4. So what the expectation here is going to be now that this will mark the low of the trend. And you also want to be aware of, are there any other technical features that may come into play here? So I just want to take a look at where we stand with the Murrey Math levels. So I'm going to add them to the chart now. Right now, we've got the Murrey Math levels added to the chart. And you can see that we are at the 0 ace level here on the GAN box. This is a very prominent level. The 3 most prominent levels are the 0 ace, the 4 ace, and then the 8 ace level. And you can see how the 8 ace level certainly came into play here. It was a key level. The 4 ace level was this little bit of a support here, and then this pivot point here for this most recent run. The other thing to note here is that we run 4 ace in 5 candles now. We're in 5 trading days. We've dropped from the 4 ace level all the way down to the 0 ace level. So that is a very extended move. We don't see this all that often in Forex, and when it does, it's certainly notable. But what we're winding up here with after that move is we're settling down at a very important level at that 0 ace level. We have that 4-bar pattern in place, which is a very strong reversal indication. So this is the point now where you would expect to at least see some leveling off in this pair, and not an extension and continuation to the downside. And if we do start to bounce, then we want to start looking at the even numbers on the GAN box for bounce targets. So the first one would be 2 ace, and then the ultimate target would be all the way back up to the 4/8. If the pattern is so weak and this pair cannot reverse, this is still a likely area where it's not going to continue, but it's going to set up and start to base. If we do base and start to go sideways, that could be an indication that we're going to head further still then, and then we'll be looking at these lower levels in the GAN box and possibly looking at the minus 1/8 level or ultimately the minus 2/8 level after an extended base here, as is indicated by this this reversal pattern. So one of two things should be expected: either a bounce and retracement, which is the most likely, or at the very least some kind of consolidation here along the 0/8 level and perhaps some lower prices. But for now, definitely be aware that the long side could be and should be the favored side, at least for the near term here, to see how much energy can be released back to the upside and relieve this this very oversold or overbought, depending on which side of the pair you're looking at, condition. All right, folks. So, give you a couple of ideas here. Just keep an eye on this pair for that reversal to develop. That's definitely going to be a very profitable, uh, uh, environment if you're on the right side of it. I don't think a lot of people are necessarily looking for it right now, but giving you a little cue here as to what to look for. And of course, as always, thanks for listening. This has been Rich for TradeSight.